Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this is for Thursday, July 8th, 2021. All right, as we look at the marketplace, a lot of red behind me today, an awful lot of it, as you can see. The markets tried to break hard, and they got thrown back from that. In other words, they rallied back. Still a lower day, but nowhere near the lows of the day. You can see you came off the lows here pretty nicely, certainly off of them in the Dow. SPY not far from the high. So the markets made back a chunk, but they were still down on the day. What does it mean? Well, let's go into one at a time. I am not surprised on the break that filled the gaps. One was here in ARC. If you'll recall, I thought the market as it was going to fall, and it started with its swing line down for the past couple of days, not just today, not just yesterday, but the day before. So on Tuesday is when this market confirmed a mini downtrend. I'll use the word mini for a reason. As you can see, it fell in, and today found some support and bounced away towards the highs. Why? Because the market hit the 18-day average of closes actually yesterday. As I pointed out, there were three levels of moving averages to offer support to the market: the 200-day, the 100, and the 18. So you have all three working there, and the market found its first leg of support. Where the market had resistance, it was running it. This is called the gorilla glue trade, if you'll recall, when you're just on that upper Bollinger Band, and then when you walk away, you either decide you're going to make another run back up, or if you start that pattern of lower highs, lower lows, and if you lose, which is often the case, the embedded reading, which happened right here, that was on Tuesday as well. That was the sign, okay, this market's in trouble, especially if when it reopens, it doesn't grab it back, and it did not. The market just slipped away. This was yesterday, and here we are today. So we still have a market, as I'm viewing it, that's overbought. Why? Any reading over 70 in the slow stochastics, from my perspective, is an overbought reading. The market has a downtrend. The bias of the market is down because you closed under the 18-day average. So all parts are bearish at this point. To go short here, you'd have to put a stop way back up here at this high right through there at 131.43, and that's fairly far away. That's an $8 risk. I don't think you're going to attract short sellers for that kind of risk in the market. BBEU still falling down. It hasn't quite hit the Bollinger Band. I'd love to see that, but I have my doubts it's going to happen. The market is just saying oversold, working lower. I see big support between the lower Bollinger Band and the 100-day average. Nothing bullish on the chart, but I don't think you're going to attract sellers with an oversold market. When we step over now to the PAVE, I've been looking at PAVE, and you know I've been saying your resistance is the 18, the support's the 100-day average down to the Bollinger Band. The trend is down now. You have lower highs, and with today's action, I just want you to see how that looks, lower lows. So now we've got what's the other part. The market also lost its, right here, the momentum that had been trying to hold on, and that's starting to point lower. Therefore, the trend of this market has turned down. Lower highs, lower lows. My instincts are that the market is coming to terms with the fact that President Biden's not going to get anything done on his reconciliation package with the if you will, this particular package will be the infrastructure through the summer. So he's probably going to have to wait till September or so, and I think people are getting frustrated with that. I'd be wrong in my thinking if you got back over 25.83, but barring that, I think you do attract sellers at that 18-day average. They'll try to look for support here as they did, and then if they can push it through 24.92, the next support. AMC, well, we'll find out. Black Widow comes out today. Will that give the market a little more good action? As you can see, you got under the Bollinger Band yesterday, and you've heard me say this so often. Are we going to get a breakout, which means the market would have to close again lower today in the bottom part of the range and lower than yesterday? No, it denied that. So it came right back into what I call the sideways action, the psychiatry trade, if you will. It'd be a better psychiatry trade definition had you recently hit an upper Bollinger Band, then the lower and bouncing around. You don't quite have that. So what you have here is sideways action with resistance up at the 18-day average. The fact that you're so oversold, I don't think you're going to attract sellers right there. In the semiconductor, got what I wanted. You had an embedded reading, and I told you I thought when it lost it, this market was in trouble. First objective was 186.01. You missed it by 15 cents. That's a run towards it, but not hitting it. If that gave ground, maybe the 100-day average is the next support, and it's just what occurred. What is the trend down? What do I think the pros will do? Well, do they want to risk $6? That's the big question. But it is a sale at 186.13 from a pure charting point of view. I'm not keen on this big of a risk back to 192.01, and you're only looking for 180, 134. I'd like to see more, if you will, meat on the bone in order to do that, but I'm certainly not bullish. PODX, they are beating the heck out of this right now. And as you can see, the market just keeps riding that lower Bollinger Band with an embedded reading. This is real bearish. So now I think you're going to attract sellers on all the rallies until the red line closes back over 20. So my attitude on this market, not to sell under a lower Bollinger Band, but on the rallies, I think you're going to attract the sellers. ESGU, you have a lower low, higher high pattern, still embedded. Momentum starting to turn down, but not enough, I think, to throw away the bulls. I think they bought today. If you were to ask me what I think off the embedded, I think today's day they bought, and I think they're looking for the upper Bollinger Band, and I think they'll get out with a reading under 79 in that stochastic. Barring that, I don't think they will. In the energy, I thought the market yesterday was the day where I think the pros covered their shorts. A little more gravy today, but selling into or being short into a lower Bollinger Band and a 100-day average of closes often is an area where you see short covering. Do I think you'll get fresh selling on the rally? Not right now because you're so oversold. In the emerging market ETF, well, you're finally down to a number where I think the pros covered shorts. Why? Again, the first challenge of the 100-day in the lower Bollinger Band since this new sell signal came in. Boom. You didn't have that before. This was a sell signal that resulted there. Then you got your bounce, and this was the new one that set up right through here, and that was the ball game. Plus, you're oversold. I think the smart money's getting out. Gold, another one of these, it just can't do its thing. An outside day down. To have an idea if the market's going to gather some strength here, you have to take out today's high. If today's high is taken out on Friday or Monday, then I think there's an excellent chance to get back up to 171.50, which is the 200-day average of closes. Right now, you're trendless. You got a higher high and low. You're trying to find support at the combination of the 100-day average and the 18. Will that 18, if you can get an up move tomorrow, skirt this market and start turning up? If not, and you were to close under both numbers, watch out below. It could get very ugly. On GDX, the gold miners, so we bounced a little, and that's about all that you can say. You didn't get out of the oversold condition. You lost the embedded reading. I thought you'd make a better run to the 18-day average. It's just not a market that's tradable from a charting perspective that I have. TLT, to say that I'm surprised, yes. 3 days up, over the upper Bollinger Band, over the 200-day average. I think this market is going to give up some ground very quickly here and surprise people. When we come over to FXE, you got to bounce today in that. Will you lose the embedded reading? Well, if you do, you got to close over the 21 level. Tomorrow's an all-important day in this market that I'll be watching. Now, you know, if you're like me, you like to bounce ideas or hear what other pros that you respect might have to say about the market. Each weekday in the morning at 8:40, I open up my charts and I start recording before 9 o'clock. And I'm giving you with that, on Saturdays, longer term charts. So each morning I start off this way. I'm going to give you the news of the day as I see it coming out with the different U.S. reports, what the market was looking for, where it's at right now. I'm then going to cover the market in another way. I'm going to bring you into the charts. Now, there'll be 40 some odd daily charts. Each video is about 20 minutes long in duration. I set it up in such a way that they're grouped this way. And by grouping them, when you go on our website to view them, there's a scroll bar. You can pull it. Let's assume you wanted to go right to energy. Just pull it. It lights up real big and it says you're in energy then. Stock indices, others, the numerous different spiders. I'm including Apple in this, and I rotate things all the time for you. That's the idea. You have your idea, you're looking to do something. What does the chart look like from maybe? I'm hoping you respect me as a chartist. And you say, you know, I like what he's saying. That's what I needed. Expensive? Not even remotely. $8.95 for the first 30 days, no contract. You can go month to month, year to year, you can quit. Just go to our website under the words research. That's where you find out this. You sign up right on the website and away you go. We'll have you signed up and going probably within one business day. If you do it over a weekend, I have to wait for the next business day. But it's that fast. And I think once you see these, you get hooked on them very fast. And I make it easy to view them all. That's the beauty of it. I'm Ira. You have a great day, and I will see you all tomorrow.